and I'm going to do a special presentation just for you on the whole gamut of how to legally avoid California the transactions tax on your vessel purchases. So, are you ready? Let's get her done. This picture represents the reason that I'm so passionate about what I do. I'll set the story for you. I come from a family of 8 kids, so there was 10 of us. I was 14 years old. I go upstairs because we lived in a tri-level house, and I go to see the Christmas tree, and that is what I see, a Christmas tree, just like that, with no presents under it. That made no sense to with me because there's always stacks of stuff under the Christmas tree simply because the family was so large. And the other unusual thing is there was a bunch of little white envelopes hanging from the tree. It was bizarre. I found out subsequently that my father was in a dispute with the IRS, and the IRS went into his Christmas account in early December and stole all the money out of it. So they had no money to buy their family with 8 kids Christmas presents. As far as I'm concerned, they're gutless pukes. And that is the way I feel about most people who work for a taxing agency who would do stuff like that. It's not necessary. He was not trying to leave the country. He was not trying to abscond. He was trying to feed a family, and they didn't seem to care, and they thought they had a right. So if you ever wonder why I'm so passionate about my tax business, now you know. So on with the boat presentation. It's important that you realize that any boat is subject to California use tax if any of the following apply. If it's used in California, that's not a city in Oregon. It's not used Oregon. It's used or stored or registered. Any one of those 3 will make it subject to an assessment by the state of California. If the boat was purchased by a California resident. Now, be very careful if you think you're an out-of-state resident and you ask your CPA, your out-of-state CPA, because he's going to give you an answer that relates to income taxes. What he doesn't know, and what many of you don't know, is that the state of California, for the purpose of use tax and sales tax, doesn't use an income tax definition. It uses a section right out of the DMV codes or the vehicle codes. And there it is, the number, if you want to look it up. So if your vessel was purchased by a California resident, or if the boat was subject to property tax in California during the first 12 months of ownership. You didn't know that you could be subject to property taxes in California if you weren't a resident. Yes, you can. This is the Socialist Republic of California. Everything is taxable unless you understand how to document and support your position. And that is what we do, this company, Aero Marine Tax Professionals, just so you don't forget my name. So what I'm going to do is I'm going to take you through the vehicle codes and show you all of the ways that you can be trapped if you think you're an out-of-state resident. But before I do this, I want to warn you. I want you to put a different hat on. Presume that you're a brand new person working for the state of California and you just went to work for the consumer use tax section, which is CUTS for a short, okay, which is the people responsible for most of the initial audit work of aircraft, vessels, and vehicles, okay. And decide that you're looking at it from the viewpoint of that you want to be a hero. You want to be the most tax productive person ever in the history of all time for California. Because if I just show these to you and you're thinking from your point of view of being a boat owner, you're going to say that doesn't apply to me, that doesn't apply to me, because your natural defenses are going to go up. That is not the way to look at this. And when we get done with it, you'll understand why. So here we go. Remember that any one of these is something that you want to take and figure out how to make things taxable. If A, address where you're registered to vote, that's simple. B, Location of employment or place of business. Let's say that you're a resident of Ohio and you are for one of the big accounting firms and you come out to San Francisco and you're doing an audit and you're here for a couple of months conducting an audit. Where's your location of employment? See how somebody who wants to be a hero at the taxing agency can use all these little pieces to make you a resident of California so they can change which exemption that they use. C, payment of resident tuition at a public institution of higher education. You may be under the false impression that if you came to California merely to go to college or go to school here, that you have to pay non-resident tuition. Well, I found out when my daughter was looking for colleges to go to, she just finished her junior year, so this was 3 years ago. Okay, that there's websites that kids can go to and swap their resident tuition versus non-resident tuition with each other. So you've got to be careful of that. So you'd think about that was a good thing so kids can pay the lower tuition. It's a bad thing because it makes you a resident of California. Now look at little d. Attendance of dependents at a primary or secondary school. What does that mean? Let's say you're the same resident of Ohio and you're married, and then you get a divorce, and then your wife moves to California. You got kids going to a primary or secondary school. You're a resident of California for the purpose of these use tax exemptions. Let's take a look at little e, filing a homeowner's property tax exemption. I recently discovered that a lot of people that owned airplanes in Washington also owned a house in Southern California, primarily out in the desert because they're looking for the sun, okay? And their local Southern California CPA told them to file the homeowner's property tax exemption to save them some money on property taxes. That made them a resident of California. And it doesn't mean they're not a resident of Washington. For purpose of use taxes, sales taxes, the transactions taxes, I'll keep saying that until I remember to stop misusing it myself, okay, you're actually a resident of each state for the purpose of their transactions taxes. So be very wary of the situation that you own homes in multiple states. F, renting or leasing a home for use as a residence. Let's say that you're the same guy from Ohio and you had some really good years and you bring your whole family out to Southern California and you stay for 2 months in a Disneyland hotel and try to go through the park so many times that not only are you physically exhausted, you're mentally exhausted. Aren't you renting or leasing a home for use as a residence when you do that? Remember, this doesn't have to be logical. You're thinking about it of how you're going to be a hero and collect the tax from this guy. G, declaration of residency to obtain a license or any other privilege or benefit not ordinarily extended to non-residents. That's pretty simple. You would know if you've done that. H, possession of a California driver's license. You would know if you've done that, okay? And don't try to hide it because they're going to figure it all out. There's a lot of people that have more than one driver's license. Didn't you know that? Okay, and if you have a California driver's license, according to this setup, you're a resident of California for the purpose of the use tax. So now this is where I'm going to ask you a question, and I need an answer from all of you who are listening to this. Okay. Little I, what does it say? Other acts, occurrences, or events that indicate presence in the state is more than temporary or transient. How would you use that? The answer, if you look at that, is the person that wants to be a hero is going to use little I any way they want. Look at that. There's no strict definition. So whatever that particular auditor wants to assert, they're going to assert, and they can. So that's why I've taken you through this whole list. The important thing for you to remember is that you don't get to decide. It's the auditors. Okay. Now, a lot of you used to think of the Board of Equalization as the people that used to collect and administer these taxes. They've changed the name of the organization to the California Department of Tax and Fee Administration, CDTFA for short. But if they discover that the owners or shareholders for an out-of-state company are California residents, they can decide to apply the 12-month requirement. Now, how are they going to find that out? Social media. That's one of their number one sources of information to make things taxable, and they're proud of it, and they'll tell you that. So be very careful what you post. I'll tell you a little story. I had a client who hired me for a vessel, and he had already gone through the whole test period by the time that he hired me. So I'm sending all this information in that I asked from him to send into at that time it was the Board of Equalization. And they've got through the whole thing, and I thought it was a good tax return, bulletproof, completely with everything, and it was denied. And I said, how come? Well, they found a photo on this person's social media of him driving the boat up the Sacramento River, right, and in the background of that picture is the CDTFA. So they do look at it. We were still able to get out of the tax because we were able to date the photo, and it was after the test period. Do you think that they would have offered that information? No, they knew when that picture was taken. There was a date on it that was clear, and it was after the test period. But trust me, if you don't approach whatever you're doing when it comes to filing and supporting your position, if you don't feel that these people are out to make everything taxable. Most of the people who work for the CDTFA, I know they're good, honest people, and they just want to get it right. But you have to approach it as if they're this person who wants to be a hero and will do anything to collect the tax, because you have to take it that serious. Here's the most important thing that you need to remember. The taxpayer is not the one who gets to decide whether he or she is an out-of-state resident. Every decision that's made on your taxes is made by someone internal to their organization, and their judge, jury, and executioner. So you have to be really good, pay a lot of attention to detail, make sure that there's no miscellaneous information on any of your documents that they can use to make it taxable, because they will. Any questions at this point? And because you can't send them in, I guess the answer is no. Here's the most important thing that you need to know. A case regarding ability to legally avoid taxes went to the Supreme Court, and guess what? They found in your favor. They found in the taxpayer's favor. Here's what they said. Proclaimed that every citizen of the United States has a right as well as an obligation to avoid taxes. That means that if you're overpaying your taxes, you're not a good citizen of the United States. That's very clear to me. If you'd like to know when this decision was made, there's the case. The legal right of a taxpayer to decrease the amount of what otherwise would be his taxes or altogether avoid them by means which the law permits cannot be doubted. If you look at the date 1934, I will guarantee you that not one person sitting in a state house in California or in the federal Congress has ever read this, or if they have, they've developed amnesia right on that spot. But there it is. It's gone to the Supreme Court of the United States, and they found in your favor. So take advantage of it. Hire me. Every time you're thinking about buying an airplane, a vessel, or a vehicle, hire me. The call to me to gather information is free. What have you got to lose? Call me. Every time you have a question about anything as it relates to California taxes, call me. My phone number is 916-691-9192. And I have a lot of people here who can also answer your questions. We're the best, and you should know it. We have done thousands of these cases, and not one person who hired us before they took possession and followed all of our instructions has ever paid a dime in tax. There you go. Here's some additional information. Anyone may arrange his affairs so that his taxes shall be as low as possible. He is not bound to choose that pattern which best pays the Treasury. There is not even a patriotic duty to increase one's taxes. There it is, right there in black and white. Over and over again, the courts have said that there is nothing sinister in so arranging affairs as to keep taxes as low as possible. Regardless of what Joe Biden said when he was running with Obama about fair shares, he's lying to you. He knows that's not true. This is what the Supreme Court said. So don't fall for all that stuff that the socialists try to jam down your throat. They're lying to you. You have no obligation to overpay your taxes of any kind. What is against the law is evading taxes. There's lots of ways to do that, and you can be as creative as you want, and I hear about them all the time. And I assure you that you're going to probably get caught. Unless you're someone who can sleep at night knowing that the taxman is going to find you, I would suggest never doing something that is evading taxes. And if you're not sure, you can call me, 916-691-9192, and ask me. Give me your exact circumstances. Now I'm going to give you some definitions. I want you to understand the difference between sales tax and use tax. And I'm going to start with another little story. I talk about legally avoiding sales tax all the time. First of all, I need to tell you there's no legal way to avoid sales tax. Everything has to be turned into a use tax transaction. All of the exemptions have to be use taxes. Sales tax has a very narrow definition. The property has to be delivered inside of California, and it has to be held in the inventory of someone who has a California seller's permit. So if you go to a store inside of California and you buy a hammer at the hardware store, and it's $10, you know you're going to pay 80 cents to a buck worth of tax on that. That's because it's delivered inside of California and it's being held in the inventory from the hardware store. All other transactions are use tax transactions. The important thing that you're going to want to know is what's the tax rate. It's the same tax rate as the sales tax. The only difference is who has to pay the tax. The other thing that's not necessarily unique to California, but is different in a lot of states, is the use tax assessment is always based on gross receipts. So if you pay $400,000 for a new boat and you trade in a boat for $300,000 and you only had to pay the $100,000 difference, it's the use tax that you're going to be assessed is not going to be the $100,000 difference. It's going to be on the $400,000 price. It's always gross receipts in California. Sales tax is imposed on retailers for the privilege of selling tangible personal property at retail. The tax is measured by the gross receipts from retail sales, and hopefully I've just given you enough definitions that makes sense to you. The obligation to pay sales tax is on the retailer. What this means to you is that if you go to a store and they forget to charge you the sales tax, they still owe it. That's what it means, because it's their tax. If they don't reimburse themselves at the time of the sale, they have no vehicle to get the money from you. Remember where I said all other transactions. So use tax is imposed upon the storage, use, or other consumption in this state of tangible personal property purchased from a retailer. The use tax, rather than the sales tax, applies to purchases shipped from an out-of-state point to a California consumer. The obligation to pay use tax is on the purchaser. That's you, okay? So there's the difference between sales tax and use tax. And to go back to the fact that I say legally avoid sales tax, I have to say it that way because that's the way that the public misuses the term sales tax. It's actually use tax. And if I can convert the public's opinion, we'll start using the term transactions tax, and we'll always know. And if you want to know how much the rate is, it's based on, if you're buying a boat, it's based on what the sales tax rate is in the county where the marina is that you normally keep the vessel at. That's the rate. Whenever in this presentation you see the term MTE, which stands for mobile transportation equipment, if just in your mind you substitute aircraft, vessel, or vehicle, this will make sense to you. MTE is a term which I'm going to define in the next couple of slides for you, that is unique to California. And this is what gets out-of-state people who try to do use tax exemptions in California or sales tax collections in California. It gets them in trouble. Oh. Sorry. I washed my hands this morning and I can't do a thing with them. Here is the definition of mobile transportation. Remember that this is a definition that only applies to the state of California. But if you look through all that, it's not just airplanes, cars, boats. There's a lot of stuff in here, but it does include all aircraft, ships, and certain large vehicles or extremely expensive vehicles. It does not include passenger vehicles. Okay. If you purchase a boat for use inside of California from an out-of-state dealer, you're liable for use tax and you must file the tax return and pay the tax or support a claim for an exemption. Supporting claims for an exemption is what Aero and Marine Tax Professionals do. If you're not sure whether you can do it, you call me, 916-691-9192. The call is free. If I'm not here, there's a lot of people here who can answer your questions. I have the best staff in the state. We're the largest company in the state that does this. And we've done thousands of these cases. And none of our clients who hire us before they take possession and follow all of our instructions has ever paid a dime in tax. If you purchase, I'm just going to give you some examples. If you purchase a boat for use inside of California from an individual, whether he or she is located inside California or not, you're liable for the use tax and must file the tax return and pay the tax or support a claim for an exemption by calling us. And remember, the call is free, just to give you free information so you can determine whether you want to do it. And a lot of times it comes down to a personal decision on the economics of the money. But the call is free. It's 916-691-9192. The call is free. What have you got to lose? A lot of times the salespeople will tell you to wait until the board sends you a bill. I think this is completely wrong. Because the state doesn't have to notify you in a timely manner. It is your obligation to file the tax return that is due in a timely manner. So if you buy a boat and let's say you register it through the Coast Guard, okay, and it's been 11 months or 12 months and you haven't heard from him, call me at 916-691-9192. The call is free, and I'll make sure that I'll help you support your claim for an exemption, or I'll tell you how to get the tax paid. Because if you haven't heard from the state and with a request for the tax, the statute of limitations, the best way to think about it is 12 months, even though it's got some other language to it that makes it can extend it for a couple of weeks. But if you want to know the truth, just call me, 916-691-9192. What have you got to lose? If you want to be able to qualify for any of the available exemptions, you must always, always, always take possession of the property when it's located outside of California. So if you're looking for a boat and you find one in California and you want to be able to legally avoid the transactions tax, you make as a condition of your purchase offer to the owner of the boat, whether it's a retailer or not, that they deliver it to you outside the 3-mile limit. That's outside of California. Don't confuse the 12-mile, which is federal limit, is for you're actually outside of the state once you get 3 miles from any shoreline. So you have to be careful when you go out in the Southern California area because you might be getting closer to one of the islands that are part of California, but you've got to be outside that 3-mile limit. Always, always, always seek professional guidance. And when I tell you to seek professional guidance, I think the best resource is to call this company, which is 916-691-9192. Our success rate's 100%. All you got to do is do what we tell you. Now I'm going to go over the primary exemption that can be used for boats, even though the same exemption can be used for aircraft and vehicles. It's called the principal use test, and we're going to start out with telling you how it's applied if the state thinks you're a California resident. It starts with out-of-state possession, and then it has usage and storage requirements, which are you must be able to support with documentation that the boat never entered California at any time within the first 12 months of ownership. And the burden of proof is on you. So that is what we do. We can counsel you through that. Once you get to a point where you've made a decision that you want to do that, then you kind of understand how all the documents, then I will tell you from that point on, it's going to cost you because we do this. We've done thousands of these. It's what we do. It's our primary source of business is helping people legally avoid the use tax in California. And that's what we get paid for. Here is how it works if you're a non-resident of California and you have to go back to that original take where I took you through the DMV codes, okay? If, in fact, you're treated as a non-resident, the boat must be used and stored outside of California for more than half of the time during the first 12 months. For those of you who know this, who know us, whenever the state wants 50%, we always raise the bar to 60%. We want to create a margin of error in case the tax auditor wants to throw some of your documentation or some of your days out. So if you're a non-resident, and remember, the state gets to decide, the test period is you start with out-of-state possession, and as long as you can support about 220 of those days of the first year, the vessel, the boat, was outside the state of California, it's not subject to tax in California. Legally avoiding the transactions tax. Remember, that's the primary thing that we do. We're the tip of the spear when it comes to helping people legally avoid those taxes. Here's the important thing that I want you to remember. The taxpayer is not the one who gets to decide whether he or she is an out-of-state resident. Remember, and that's why the Great Seal of the state of California is so big on this thing. Remember, they get to decide everything. So you have to understand how all this works. And the only place you're going to get that information is by calling us and finding out. And how do you do that? You dial 916-691-9192. And almost everybody in this office can answer that question for you. So if the thing to remember is that you don't get to decide, and the burden of proof is you must be able to prove without a shadow of a doubt where your boat was located when the title was transferred and throughout the test period. So if you're being treated as a resident of California, you have to be able to support with documentation that it never entered California. Never. If you're a non-resident, it's just a matter of counting the days. And there's a subset of that of the engine hours inside of California. And in both cases, the 60% of those have to be outside the state of California. In other words, you can't have your boat sitting in Ensenada with the wonderful people at the Ensenada with, you get to know Fido, the dock manager, and all it ever does is sit there. And then you keep it outside, let's say for 7 months, and then you brought it back inside of California and you're running up and down inside of California. They're secondarily to the amount of days, they're also going to look at the amount of engine hours that you expended inside of California. And that has to be the same. that has to be the same 60. They take the total, let's say you did 1,000 engine hours, just so we can get a number that's easy to do the math at. You have to make sure that the total amount of engine hours that the engine was running, and you're doing nautical miles is the real way that it's calculated, has to be less than 40% of those engine hours or nautical miles have to be inside of California. That's a secondary way that they can make this all taxable. So there's the phone number. You're probably tired of me saying it, so I'll only say it one more time, 916-691-9192. There's my email address, and there's our website. And if you go to the website, you get a free book. Okay, it's 5 steps about how to legally avoid the tax. We have lots of services for you. I encourage you to go to the website. There's informational videos on how to do stuff. If you look under testimonials, there's client testimonials, both done in video, and just pictures of the planes and the boats and what people have to say. But a lot of stuff to back up all of the claims that I made for you. And what is the claim? We never fail. If you hire us before you take possession and you follow all of our instructions, you will not fail. Now, if you've already taken possession, that doesn't mean we can't help you. You could have, by accident, because you didn't know, started out with it in the right way so that we can still help you. So even though you've already taken possession, okay, doesn't mean I cannot help you. The only thing that determines that is the facts, and that's what we'll go over in that free conversation. Oh, I lied to you because I'm going to give my phone number to you one more time. 916-691-9192. I'd love to hear from you. And that's the end of today's substitute webinar. Thanks for signing in.